Most people have a general sense that good credit is good when you're getting a mortgage, but my sense has been that when it comes to specifics, people are less clear on how it impacts their options or their pricing. So can you give us some specifics of what the impact is on what your loan options are and what your pricing is? Why does your credit matter when you're getting a mortgage?
In mortgage, it can cost you both in increased upfront fees and increased interest rate. So both the upfront cost and the overtime cost can both be impacted by your credit score. And so it's super important that you get a good credit score. The pricing is directly tied to your credit score, and generally, there are a bunch of different factors. You can't just say, well, if your credit score is different by 20 points, your pricing will change by X. Sure. Because it depends on what your loan to value is. Are you using an FHA program, a conventional program, or are you a first-time home buyer? There's a whole myriad of things, but almost invariably, you're going to do better. You're going to fare better. You're going to have more options, and therefore better pricing options available to you if you have a better credit score. And so, and that that difference can be enormous. If you go from a 740 credit score to a 720 credit score, you could see, let's say you're buying a $500,000 house and you're putting 20% down. You could see $4,000 or $5,000 in cost changes up front. And then increase in interest rate over time. And so, it really is, it's hard to understate or to overstate how important it is to have a good credit score and pay attention to that ahead of time.
You mentioned 720 versus 740. Can you explain how the pricing works, at least with mortgages in the block pricing?
It's not like your credit's going to be different if you have or your pricing is going to be different if you have 716 versus 717 credit score. They have block pricing adjustments generally every 20 points, that you change in credit score. So, if you have a 760, you're going to have the same pricing as if you had a 750 or 745. But if you get to 740, then your pricing is going to be worse. And if you get to 720 again, and so generally you're going to be in 20 point changes, that your pricing is going to be impacted. Now, that isn't necessarily the case for mortgage insurance providers. Their pricing adjustments may be a little bit more fluid, and they're not going to be necessarily as homogeneous as Fannie and Freddie are across the board. So you could see some impacts from going from 740 to 750 with your mortgage insurance, even though it doesn't change your interest rate or your pricing on the loan.
If you're someone who is pretty debt averse or just hasn't built up any credit, hasn't gotten a credit card for whatever reason, is that going to significantly impact your options when you come to get a loan? Obviously, it's possible to get a mortgage without a credit score. How much harder is it without a credit score?
Yeah, I would say, do everything in your power to get a credit score before coming into getting a loan, because you're very likely going to be impacted, financially very significantly. There are sometimes different programs have what they call manual underwrites. So most everything that you do through Fannie and Freddie, they do an electronic underwrite. They will take all your data, they'll take your credit history, they'll take your job history, and they'll take your debts and they'll run it through their electronic underwriting engine, and it will come back and say, yes, we'd approve this loan if this data is accurate. And then you prove the data and you get your loan. You can do a manual underwrite. You can't do that electronic underwrite without a credit score. You can do a manual underwrite, but with a manual underwrite, generally you often have pricing adjustments related to a manual underwrite. So you're going to pay more. You'll have restrictions on guidelines, much tighter guidelines, so you can't qualify for as much as you would otherwise qualify if you didn't have to go through a manual score. And so it is possible, but it's not necessarily easy or efficient to get a mortgage that way. I've had countless situations where we've had people that have been able to get the loan, but just because they got the loan, they could have done some very simple steps 6 months ahead of time, and they would have had much better options available to them. So yes, it's possible. Don't despair if you really want to buy right now. But more importantly, if you're listening to this and you don't have a credit score, give us a call or just go get a credit card, open up a credit card, get something going. Doesn't mean you have to start being a credit card user. You can have a credit card. You don't have to carry a balance, but just get a credit card established so you can get that score going and have much better financing options available to you.